Last night in California time, there was an earthquake in Russia, and then there was tsunami warnings and actual tsunamis all around the world, potentially Alaska, Hawaii, the west coast of the United States, west coast of South America, all kinds of places around the world, potentially in great danger from this tsunami. Nobody died in the earthquake, and apparently nobody died in any of the tsunamis, as it turned out to be something of a nothing burger. Now, I saw some damage happening from some of those, but pretty much a nothing burger. Kind of reminds me of tariffs. There was an earthquake called Liberation Day back in April. The tariffs were going to destroy the world. Absolutely everybody in the world was wondering how in the world they were going to make it out on the other side. And here we are, many, many, many months later. We seem to have almost all of the major countries lined up with regard to paying the United States massive amounts of tariffs. Well, of course, yes, I know the importer pays the tariffs. Do I need to go across that? Do I need to go through that stuff again? But anyway, we have deals, and the deals look to be fine. And the economy is perking along at 3%. Now, I'll explain to you how that's a little high and how it really needs to be averaged out with last quarter, but we'll talk about that. But in inflation, apparently right at 2%, but no, the Fed won't be cutting later today. Now, there was massive amounts of information out yesterday and massive amounts of information out today, all of which is pretty darn good. You really have to look hard to find anything negative in the economic news, and yet the markets are flat. Now, the VIX is also flat, so that's good. That suggests risks on. But as we talked about last night when I was with Nicholas Gibbs, the market is stretched. The S&P, all of the equity markets are very, very stretched. So it's going to be tough to get these markets to go much higher without really, really good earnings. Well, that all starts today. This afternoon's going to be amazing. We got the Fed, which is not going to cut rates, of course, and we've got two of the Magnificent Seven today and two of the Magnificent Seven tomorrow. Yeah, it's going to be, but maybe at the end of and then we got the employment numbers on Friday. Maybe we'll still be looking flattish by the end of the week. Maybe that'll be a good result for this wild and crazy week of reports. All right, well, let's start out here. We got Holmar's blog. He says he thinks he says, do you think Tesla looks bearish? Well, the institutions don't agree. Tesla currently has a 98% upside score on Prospero, which means it's picking up lots of bullish activity on the options chains. Okay, so now if you add that together with what Nicholas Gibbs and I talked about last night, where he says that we're in this wedge pattern and that stock needs to break up or down, well, if you put that in, it suggests it's going to break up. Nick, of course, also believes it's going to break up. He thinks there's a better chance breaking up than breaking down. And another thing that a lot of people are pointing out is the rest of the Magnificent Seven is sitting up near all-time highs, except for Apple and Tesla. And so Tesla not being near all-time highs, out of everything, is likely to get more risk capital coming into Tesla than into the others. All right. Anyway, that's a few thoughts. What do I know? Right now, I still just believe that the catalysts associated with Tesla are going to continue to push Tesla up, up, up as the Robotaxi thing gets more and more developed. Barron's on talking about Tesla's $4.3 billion battery deal with LG Energy. So this comes on top of the big deal over the weekend with regard to chips. Now we've got a battery deal. The move comes after Reuters reported that South Korea's LG Energy Solution, LGES, signed a $4.3 billion deal with Tesla to supply lithium iron phosphate LFP batteries. They don't use the more expensive and controversial elements such as cobalt. That has nothing to do with the decision. It has to do with the fact that South Korea and not China. Reuters cited LG in its story. Tesla didn't respond to a request for comment. No kidding. There's a new supply relationship. This is a new supply relationship for Tesla. To date, Elon Musk EV maker has relied on internal production plus Panasonic plus China's contemporary Amperex technology, in other words, CATL. The latter is the world's largest maker of lithium-ion batteries. Diversifying and adding suppliers can be a good idea for many companies. It should also provide Tesla with more tariff flexibility. The Trump administration hasn't announced U.S. trade deals with South Korea and China. It's close on China, and we pretty much know where it's going to end up. But the potential tariffs on China's imports could be much higher than those on South Korean imports. What's more, LGES has U.S. battery making facilities that would be tariff-free potentially. That's not a good story there, because there's a possibility that there could be an impact on the raw materials being used in those domestic manufacturing situations. Tesla, of course, uses batteries in its EV business. It also has a large battery storage business. Musk spoke about the potential for the storage business when Tesla reported. He said at that meeting on July 23rd, "I think batteries are going to be a massive thing," says Musk. Not that many people appreciate just how gigantic the scale of battery demand is, adding that the sustained output of the U.S. power grid is roughly 1 terawatt, but the average use is less than half of that. Utilities have to meet peak demand, but air conditioners aren't blasting all the time. Using batteries to store energy when demand is low means less new power generation is needed. Batteries can make a more efficient grid. He suggests that it could be as high as double what it is now. Tesla's energy generation and storage business posted second quarter sales of $2.8 billion. The car business posted sales of $16.7 billion. And I can pretty much tell you that by this time next year, the numbers will be about double that $2.8 billion. Forbes, nearly half of Americans say they would never ride in a Robotaxi. And that doesn't mean Tesla's Robotaxis. It means any kind of autonomous ride hail. And we can't even blame Tesla's messy Robotaxi launch in Austin, as most of them hadn't even heard about it. So as I just pointed out, it's not about Optimus. It's not about Robotaxi, Tesla. That's according to a survey focusing on Tesla by the Electric Vehicle Intelligence Report, which found that 65% of 8,000 people polled had heard nothing at all about the Tesla Robotaxi launch, despite reports of cars driving down the wrong side of the road and speeding. After reading one such story, half of those surveyed said they would now be less interested in using a Tesla Robotaxi. Why don't they give them something to read about the Waymos or about the Zooks or about any of the other ones? Or why don't they give them an article to read about how many miles they've driven without an issue? Tesla aside, 46% of those surveyed said they would never consider riding in any Robotaxi, further 31% saying that they were not currently up for it, but would never say never. A further 1% said they had been for a Robotaxi ride and wouldn't do it again. 1% who have ridden in them said they wouldn't do it again. People over 65 were more likely to say no. That makes sense. Younger people were more likely to say yes. Forget taking a ride. More than half said Robotaxis, they strongly believe they should be outright illegal. 53%. Public skepticism is understandable, said Elad Hofstadter. Do you know how many people thought that cars driving over, I think it was 25 miles an hour would kill you when cars first came out? That was like most of the population. And also same thing with electricity. People were totally freaked out. The early promises around autonomous vehicles in the late 2010s set sky-high expectations, but the industry hasn't always delivered consistent real-world performance to match. Previous writers, do they anywhere in the article ever say that these robotaxis, I don't care whose they are, probably even Cruise, would be safer than a human driver? These maybe they suggest that to the people taking the poll. Do you know that statistically, a driverless vehicle is way safer than a professional driver sitting behind the wheel? Those EVI poll results fit with previous studies. A survey of Brits in July by Starline suggests 11% would hop in a driverless car, only 4% saying the vehicles are currently safe. For what it's worth, Kathy Winter, the COO of driverless firm May Mobility, told Wired that she thinks such survey results are simply an artifact of low exposure to new technology. And that might be correct. Other studies have shown that people do feel more positive about driverless cars once they've gone for a ride. Belgian academics revealed that people develop more positive feelings about driverless technology after going for a ride in one, noting that the study indicates the large survey studies do not require prior experience before they ask the question. Additionally, a report last year by J.D. Power suggests that consumer confidence is 56 percentage points higher among those who have ridden in a robotaxi at a whopping 76 versus 20% for those who have never been in a Waymo or other self-driving car. We believe the public opinion will shift when people experience the benefits for themselves. Once people experience it firsthand, the feeling of handing over control is a-okay. Unfortunately, there's been a lot of confusion in the market. Features like Tesla's full self-driving have that's enough. I think we've read enough of that study. Let's go on down to the next thing here. What about Florida? According to USA Today, Ron DeSantis signed legislation allowing self-driving vehicles to operate with a human on board in Florida with restrictions. The vehicles must meet insurance and safety requirements. Owners of autonomous vehicles must carry a minimum of 1 million insurance coverage. Vehicles must be able to achieve a minimal risk condition, such as bringing the vehicle to a complete stop in a reasonably safe state and activating the vehicle's hazard lamps if a failure of the automated driving system occurs. The owner must immediately report crashes to law enforcement unless the vehicles have a system in place to report them automatically. The law also exempted passengers from laws against phone use or other distractions and established that the automated driving system, rather than a human, was the operator of the vehicle and therefore liable, as I've been telling you all along. With this bill, Florida officially has an open-door policy to autonomous vehicle companies, and I encourage them to relocate from California to Florida, DeSantis said. This from TechSpot. Waymo has partnered with Avis. They got partners everywhere. They've partnered with Avis to manage the Robotaxi fleet in Dallas, Texas, despite having an active tie-up with Uber for fleet maintenance in Austin and Atlanta. As part of the multi-year deal, Avis will oversee vehicle maintenance and depot operations, while Waymo will focus on technology deployment. Tesla updated their Robotaxi app. This is according to Tesla Roddy. The update also includes bug fixes and minor improvements for the apps. It looks as if the ride-hailing Robotaxi will go from one end of the other now in the ride-hailing area in Austin for $13.70. That ride is about 11 miles, which is barely over $1 a mile. That same route at 8:30 this morning on an Uber would be $16 plus tip, of course. So say another $3. So almost $20 for that 11-mile drive, about $2 a mile. Apparently, nobody cares about the China sales numbers anymore. I had to search and search and search. It used to be that on Tuesday, they were everywhere. And now on Wednesday, I really had to look. Anyway, we're at 10,800, which is super strong for this point in the quarter. All right, this is Randy Kirk. Hit like, hit subscribe, hit notify, all that stuff. Later on today, we will have Brian Wang, and then at 7:45 tonight, you'll have me, and I have no idea what I'm going to talk about. We'll find out later. I'll find out later. It'll be, but of course, it will be fabulous. Patreon. Have you thought about anything? Have you considered? Or how about joining right here on YouTube? Anyway, Real EJ and Tony, who I really like. This guy really comes up with great charts, great analysis, great descriptions. He says this: while consumer spending accelerated in the second quarter compared to quarter one, government purchases barely grew and in fact are now flat on the year. This is the reprivatization that Trump and Besson have articulated, growing the productive private sector, not government. So consumer spending increasing, government spending flat. Personal income, even after adjusting for inflation, rose in quarter two and lifted real disposable personal income 3%, with the savings rate rising to the highest level in the year at 4.7%. While consumers are still hurting, incomes and savings are moving in the right direction. GDP came in at a very hot 3.0% today, but you have to take into consideration, this is not him, this is me, but you have to take into consideration the low number last month. And I asked Grok, And Grok thinks it would be better to average the 2 months together and figure that the economy is growing at about 1.25%, which makes sense to me. Real final sales to private domestic purchasers, the sum of consumer spending and gross private fixed investment increased 1.2% in the second quarter, compared with an increase of 1.9% in the first quarter. So that would give you the same idea. They were growing about 1.2%. The price index, now listen to this, here we go. The price index for gross domestic purchases increased 1.9% in the second quarter, compared with an increase of 3.4% in the first quarter. The personal consumption expenditures PCE price index increased 2.1%, compared with an increase of 3.7%. Excluding food and energy, the PCE price increased by 2.5%, compared with an increase of 3.5%. So the numbers on PCE should be coming in excellent. I think that's tomorrow. So much economic news this week. ADP's National Employment Report. Private sector employment increased by 104,000 jobs in July. Annual pay increases were 4.4%. So there you see it again. Pay is going up at an annual rate of 4.4 according to ADP, and yet inflation's at 2%. So real earnings are going up. And employment going up by 104,000 after last month, and that was adjusted from -33 to -23, I believe was the number. ADP says our hiring and pay data are broadly indicative of a healthy economy. This is Nayla Richardson, chief economist. Employers have grown more optimistic about consumers, the backbone of the economy, that they will remain resilient. Hiring gains were led by a resurgence in services, with the exception of education and health, which have posted a net loss on jobs so far this year. So the government-related jobs are going down, where private sector are going up. Year after year, pay growth in July was 4.4% for job stayers and 7% for job changers, about what it's been so far this year. Trueflation came in at 2.04% this morning, year over year 2.09. The President of the United States gets a 48% this morning. But it's, what's interesting is the other polls now have him about 46% on average, according to Real Clear Politics. So all of a sudden, the other polls are starting to somehow figure out, of course, that Rasmussen has been the most correct, or among the 2 or 3 most correct. And the other ones that have been completely off, they're starting to look a lot more like Rasmussen. All right, where we got the VIX, I always want to see where the VIX is. We have VIX at 1588. That's excellent. It's been bouncing around all morning. Everything's been bouncing around all morning. Tesla, the Dow is now actually up 0.19. The NASDAQ's up 0.38. Tesla is up 0.13. S&P up 0.25. So everything is up now. But man, it was like all of them were just moving around. Tesla in particular, and has been both above and below the line this morning. Apple, the Magnificent Seven, same thing. You got Apple down, Amazon down, and the rest of them up, with NVIDIA the strongest at 1.72% up, going crazy there, NVIDIA. You've got the Magnificent Seven, same thing, completely mixed, as much red as green this morning. Okay, so what do the bonds make of all of this activity? You almost can't ask for a better day in terms of what the economy is doing. But the bonds are up 3.6 basis points, reversing yesterday, but only partially. So you've got it at 4.36 now, which is lousy, but at least it's down compared to where it was a couple of days ago. By the way, Mercedes numbers came out today and they were horrible. So that's not good. Okay, we got oil up another 36 cents this morning. We're almost at 70 cents. That's not good, but that's all going to be dependent right now on this whole Russia deal. This is a different Russia. This is where Trump has said, if you guys don't figure it out and do something with Ukraine to move towards peace within 2 weeks, which is now a week and a half, we're gonna stop your oil from being sold anywhere in the world. Natural gas down 3.41 this morning, 303. That is really low. Might dip into the lower than $3. Gold is down another $24 this morning. But wait a minute, wait a minute, wait a minute. Something happened. It must have gone up somewhere because we're at 33.56, which is up from our, remember we used the 33.33 as kind of our number. Well, yesterday we were at 3,300. So somewhere I missed it where it went back up and now it's down 24, but it's at 33.56. So kind of up overall compared to kind of our mid-range that we've been looking at. Silver also down a little this morning, 1.48% at 37.72. That's the lowest I think I've seen silver in a while. Copper down a little, 0.60 at $5.60. The dollar mixed this morning. We've got Bitcoin flattish, up 327, 117.8. It has been very flat for Bitcoin for quite a number of days now. And we've got, that's it. That's it. We've done it all. Yeah. So last night, of course, you want to go back and take a look at what Nicholas Gibbs and I talked about. He is really hitting it out of the park right now. So I'm going to put that card up to go look at. Not to say that, Brian White and I didn't have a good time, but I think that Nicholas Gibbs is where you want to go back right now if you've got some time. And then later on today, as I mentioned, I got Brian Wang at the 4 o'clock, 5 o'clock hour, somewhere around there. And then 7:45, a surprise, even to me. And then one last time, let's take a look at Tesla just to see if it's above or below the line. After scooting around, yeah, it's still above the line at 321.94, up 0.23%. I think we'll just leave. I don't know what's going to happen today. We got the Fed this afternoon. Oh, that's what I'll do. Yeah, well, Brian and I will talk about the Fed. Maybe I don't know. We'll see. I don't really, I think it's time to say goodbye. It's been great talking to you.